It was the
Really?
craziest couple of weeks of all time. This market it's interesting to say the least, but a market that has continued to move up and up and up and up, other than the last 2 days, which is, I certainly think, been some form of shock and awe. It's been crazy, and people are beginning to wake up, I think, to what's happening around the globe, and are more concerned about value, keeping their money in dollars, which seems more like a melting ice cube these days than a currency. In many ways, however, it's a very, very, very big move. In fact, it fell by 5.7%, as you said. It's making it the largest one-day drop in 12 years. It's called this is a 4.5 sigma move, which is just a fancy way of saying that such a large move only happens one out of every 240,000 days in a normal world. It's very unusual.
We talked a little bit about the silver, or I'm sorry, the gold, the massive drop in gold. It wasn't massive. It was like a 6% drop in gold. And gold was up by 66%, over the year. And so it really wasn't a huge correction, but it wasn't authentic either. And you've done some work figuring out who the heck was behind this. Can you talk about it?
Yeah, well, and that's the thing. And it's actually pretty darn close to 10%, was the final number. And silver fell a tremendous amount also. And one of the things that I've always said to you, Sarah, that you are more media than the mainstream media truly is, because you give the facts the way they're supposed to be. Now let's look at the side of the mainstream media who said everywhere. You saw more mainstream media coverage of gold over the last several days than you did the whole way up. And some of the things that they would say, which are valid, went up for 9 straight weeks, valid. Was overbought, valid. Was in need of a correction, valid. Markets don't move straight up without a pullback, and this could be a flush out, also valid. Was beyond moving averages, way above moving averages, valid. The RSI, the momentum indicator, way in overbought territory, and typically you would see a correction, valid. And could this be the top? That was what they all wanted to say, a top,
Yep, yep.
like we saw in 2011 and 1980 before that. And everyone is talking, this is the top, sell your gold, it fell that much, blah, blah, blah. Okay, all of it's valid. What invalidates this is how it happened. And they neglect to tell us how the snowball got rolling down the hill. Now, this is the part that bothers me, because, it's kind of like if your mom said to you when you were a kid, don't play football in the house. If you break something, it's your rear end, and you break her favorite vase. And you neglect to tell her that you were playing football. You just bumped into it. You said, but you were playing football in the house. And that's kind of what I'm getting at here. What the mainstream media said in many respects was valid. Again, bashing gold, always looking for the opportunity to show the downside of gold when it has outperformed everything for the past 25 years. All traditional assets pale in comparison to the performance of gold and silver, in particular gold, but now silver too. All right, so what happened? So at roughly when the first snowball went down the hill, it was in the middle of the night. They got the ball rolling, and there was one that happened very late and one that happened around 9 o'clock, and it was last week between Wednesday and Friday. But in both instances, some entity, and we believe they are European central banks or commercial banks on behalf of probably some of the central banks, but 3 or 4 European commercial banks came in and dumped billions and billions and billions and billions and billions of dollars worth of gold and silver onto the market after after the United States, New York had closed and before Asia had opened. The other one of them, either the first or the second, was after London had closed before it got to New York, or after Asia had closed before it got to London. In either case, the exact time, all I can tell you is that it was done in the access market where there is zero liquidity. The traders are not there. The only way to sell that amount of metal would be to do it in New York during New York trading hours when the traders are there, when the liquidity is there. so that they could slowly bleed it into the demand that we've seen for the last 9 weeks, not dump it when in the most thinly traded segment of the trading day, when no one is there to absorb the sell orders. And all that would do would be guarantee you the worst settlement you could possibly get and trigger the sell orders that are run by algorithms that are running hedge funds. When they get breached, bang, they sell, which the price falls more, trigger, and gold falls by 150, almost 200 plus dollars, and silver by a couple of bucks. And then it happened again the next day. I think the first one was in the middle of the night. The second one was at about 8 or 9 o'clock Eastern, in between the US close of New York and before Asia open. In either case, that trader would be fired and shot, and not in that order. You are guaranteeing yourself the absolute worst settlement. It was a drive-by shooting. Now, what happened?
None of the business news channels, none of the finance channels, none of these news organizations even bothered to dig into it, but they did a coordinated effort to then say how bad gold is, which ballooned the losses and got that snowball.
Of course. And if you want to say all the things that are valid, you might want to say, by the way, because where's the journalistic integrity? Where's the effort that you and I put in every day, like we were talking about before we came on air, to say, by the way, some idiot with a third of a brain cell dumped it when there's no one there to receive the sell orders, collapsing the market. Now, the other part that's very interesting is that there's a man named Michael Lynch who does a great job at analyzing the COMEX market, and he said something very interesting happened. He said right after that, now the second one that happened at around 9 o'clock, I think that would have been on Thursday, I believe, last week. Silver went down by $1.50, and bang, shot right back up into the green. Gold, because of all the sale orders, the triggers, it didn't make it all the way back up. But what happened to push it back up? Well, it's very interesting to me. He cites two major U.S. commercial banks that came in and bought tremendous amounts of immediate delivery contracts, the October immediate delivery contracts. And in fact, between the 17th and the 20th, or the 17th, 18th, and 19th, there were 6,000 contracts for immediate delivery issued in gold. Now, what's very unusual about that is that late in the month, it's actually a record for that volume that late in the month. Traditionally, when contracts are held, the first day of delivery, they post notices, we're standing for delivery, which would be October 1st. And instead, after the price got the snot knocked out of it by selling December future contracts, which drive the future price down, drive the spot price down, when there's no one there to provide liquidity, exacerbating it, hitting sell orders, someone came in and bought immediate delivery October contracts where you can buy right now and stand for delivery. We are at, in terms of delivery this month, and I'll tell you who it is in a second, but in terms of delivery this month alone, we are at already almost 59,000 contracts at 100 ounces apiece. So that's 590 or 5.9 million ounces of gold, in essence, stood for delivery this month alone. And who's standing for delivery every single month on billions of dollars worth of gold and silver in COMEX? Who is bringing all of this in, saying, no more paper promises. Give me the real thing. Who's doing it? Journalism isn't talking about that either.
Who is doing it? Who are you
That
thinking?
is a good question. If I had to guess, and I'll tell you, let me reserve that for one moment, and then I'll answer that. So, all right. We got this situation. Now, who came in and bought it? Well, Michael Lynch says there were two Western banks, Morgan Stanley and Bank of America. Now, what is interesting about that? So my whole career, Sarah, people would say, okay, fine, a 5% allocation. Those financial advisors or Wall Street wouldn't even say any gold. Jamie Dimon, never. No one would talk about gold, right? You don't need to own any. It's a pet rock that pays no interest. Well, it's outperformed the S&P for 25 years, 9.9 versus 9.6. And that's if you reinvested your dividends the whole way, which no one does, per year, 9.9% per year versus 9.6 for the S&P. It's beat the S&P 500 this year. It's quadrupled it in the face of the AI tech boom, the biggest boom ever. Gold's quadrupled it. No one talks about it. It's because whoever is buying all of this, the central banks, and now the most knowledgeable traders in the United States, like Bank of America and Morgan Stanley, wait till I tell you this last piece of it, they're gobbling the crap out of it. And they're doing so using the rhetoric and the lack of any attention or any positive spin on media or any journalistic integrity to do so. It's been the central banks for 5 years, as I've been screaming to you, as it's gone way the hell up in price, and no one talks about it. So what's unusual about Bank of America and Morgan Stanley? Morgan Stanley's chief investment officer a month ago came out and said the 60-40 Wall Street mantra, the 60% stock, 40% bond that has been for 50 years. They would tell you, if you're going to retire, let's put 60 in stock, 40 in bonds, and let it run. And in an interest rate environment since 82 that's fallen at a 45-degree angle, you retire wealthy. But he comes out and says, oh, that's no longer. It's 60-20-20. Sell half of your bonds, put 20% in gold. What? Really? Well, Morgan Stanley, chief investment officer, was the one that said that. Michael Lynch says they came in and bought a tremendous amount of gold and silver. The other one, Bank of America, their chief analyst, Michael Hartnett, who has a very expensive newsletter, north of 10 grand a year, sends it to the institutional traders. He said, no. The new mantra is 25% stock, 25% bond, 25% short-term treasury, 25% gold. What? So Bank of America and Morgan Stanley, who are telling their clients to put 25 and 20% of their assets in gold, came in and scooped it all up for immediate delivery contracts, records 3 days in a row, record delivery that late in the delivery cycle,
so
massive amounts.
They fixed it so that they could get it at a much lower price so they could
and cover short positions.
And they gained
and cover
the system.
short positions.
Okay,
Yes.
how illegal is that? I mean,
it's coordinated.
Is it legal? Can you coordinate it? Can you take down the market, screw everyone, get that, because they screwed everybody 10%, and then get that at a lower rate and then jack it down, it's gonna go back up.
Well, who's on vacation right now? Oh, that'd be the CFTC. As the government is shut down, there's no watchdog.
Yeah.
They've been doing this stuff forever, and it is for sure collusion. But the thing of it is that the footprint shows that the sellers were European banks and one Canadian bank. The buyers were the U.S. banks. Now that takes us down a different path for another day, where there are people like Tom Luongo who believes that there is a battle going on between the European banks and the banks here in the West. So you asked me, who could it be? I've had this feeling for a long time that we are moving to a new system where gold and silver are being integrated into the system. The United States government calls silver a critical element right now. They just wrote that into the new guidelines that are being approved right now. And you've heard me talk about Judy Shelton and all of the gold, billions upon billions upon billions upon billions upon billions that have been coming in since November. We've been net exporters for the last 50 years, and now we are, if not the largest importer, at least according to records that we know of, across the globe. Massive amounts.